Hello everyone and welcome to another video where we are going to discuss the global markets and we are going to discuss the implication of the global markets on Nifty 50 and the Indian stock market. There have been a few things which have happened this Friday. Especially on Friday, we have seen that the tide has turned against the bulls and we have seen a little bit of selling also playing out in the global markets. So with respect to that, let us analyze what is happening in the US market with respect to the S&P 500, and then we are going to discuss what may potentially play out in Nifty 50 as well. So without further ado, let us go and analyze what the price action of the US market is stating and how it has played out in the past as well. So what we are seeing over here is this was a kind of a lower high, lower low structure which played out. After that, we see a kind of a Wyckoff range getting created over here. Market went up and then it went into a stage 2 structure where we were seeing higher highs, higher lows created in the process. We also saw a kind of a pullback getting played out, but in this pullback what we are analyzing over here is the fall was also very quick and the move on the upside was also very quick. And here what has happened is all of these individuals who have created positions over here, there has not been any point where the market has actually corrected and given them another opportunity to scale in. Rather, what has happened is that the market has one directionally moved in the higher direction only. So right now all these individuals who created positions here around this point, they were seeing a handsome amount of profit. What we have seen this Friday is that we have seen some amount of profit booking happening in that market. And what is little concerning is that the market has given a wide range red color candle, and there is a possibility that little bit of correction may also follow through on the downside. Now, what I want you to analyze again is, let me remove all of these drawings. And now if I'm going to analyze this, what I am seeing over here, this was a kind of a structure formation which was happening over here. Market came down and then the market just kept moving higher and higher and went very far from the 30 weekly moving average as well. So now when we know the concept of mean reversion, which plays out multiple times in the market, we do know that when the market is around these areas where it is very far from the 30 weekly moving average, naturally you should not be inclined to create bullish positions around here. What you should be waiting for is rather wait for the market to correct a little bit around these regions. If another bullish structure is created, that time you can potentially go and create some bullish positions in the market as well. So what we are seeing right now in the S&P 500, this isn't something which is surprising. Rather, this is a part of a normal market structure. You see market go up, then you see a little bit of correction play out, and this is a healthy correction also, which would give another opportunity for all of those individuals who did not create position around this place, or all of those individuals who would be looking to scale into their positions in the times to come. So now what we are going to estimate is that since the US market is also known as the mother of all markets, there are going to be some implications on the stock markets of other countries as well as the market continues to head in the lower direction. So what we may see is if the market does come down, if the US stock market does correct and it comes around these regions, we may see a little bit of negativity in the Indian stock market and in the global stock market overall. Now, there have been times where the Indian stock market has definitely performed and it has done better than the S&P 500. The Indian stock market has outperformed in those scenarios. But if we are to see this scenario and a pullback, the possibility is good that little amount of selling may also play out in the Indian stock market. So let us analyze that angle in case S&P 500 negativity spills over to the rest of the world and the rest of the stock markets also do go into a little bit of corrective structure. So here, what I have done is I have pulled out 3 charts. And what we are going to do here is we are going to analyze the historical price action reading which has played out. You can see that these are charts which are quite similar to the first chart which is there. This is of Nifty 50. The other charts are of some stocks that we cannot discuss, but our intention is to read the price action structure over here. Based on that structure analysis, we can make an estimation of what may come in the future, because that exactly is what price action is. We try to analyze the historical price action, and based on that, we are going to derive some strategies. Whatever price action strategy which has been derived by us, it has been derived from historical price action reading. And similarly, we are going to do one more historical price action reading as well. So what we are going to do over here is, you can see these are are structures which are quite similar in nature. We are seeing a lower high, lower low, lower high, lower low. Here also in the second chart, what you can see is a lower high, lower low, lower high, lower low. And here also you can see a one directional fall which has happened in this particular chart as well. Now, what I am interested in is in the up move which has followed through after that down move has played out. So what I'm going to do is I'm going to go into a daily time frame. I'm going to do a little bit micro price action reading as well. And let us remove all the drawings which are there in the chart so that we can analyze it in the most clear way possible. So let us discuss this chart as well. We can go to a daily time frame here as well. And this last chart as well, let us go to a daily time frame in this particular scenario as well. Now, what I am seeing over here is I am seeing that Nifty 50 was heading up. It made a swing over here, first swing, second swing, third swing. These are the three distinct swings that I can see with respect to Nifty 50. In the second scenario as well, second chart, if we just go down over there, I can also see over here, this is the first swing, the second swing, and the third swing which has been created in this chart. One more chart we have at the bottom here also, we can see first swing, second swing, and third swing which has been created. Now, what I am particularly interested in is in the third swing, and after that we are going to try and correlate the price action which has played out and which may potentially play out in Nifty 50 as well. So in the third swing, what I am seeing is that in this third swing I can see some wide range candles which are taking the market in the higher direction. So here this is the swing of reference for me. One more swing, if I can see in the second chart, this is the swing in which I am seeing some wide range candles taking the market in the higher direction. And in the last chart also, what I'm seeing over here is that this swing is also backed by big wide range candles in which the market has headed in the higher direction. So we can see a kind of commonality in this one, and this one. Now, after that, what has played out, let us analyze. In the middle chart, what we are seeing is that the market has come down from the top around the previous swing region. And from there, I am seeing first swing in the higher direction, second swing in the higher direction, third swing in the higher direction as well. Let us analyze the last chart as well. From the top, market has come down. And from here, first swing, second swing, third swing in the higher direction. So three swings have been created in the higher direction in both the charts, in the middle chart and the chart at the bottom. After that, what we are seeing is after creating the third swing, there was a kind of a negative scenario which was created at the top, and the market came down, breaching the previous swings, previous pivots which were created in the process, and market has gone down below this pivot as well, shaking out the weaker hands in the market. Then what the market did, market again took support around these regions and started to head in the higher direction. In the middle chart also, what we can see is the market created a kind of negative structure at the top. And then what the market did, this swing was taken out in the times to come. This swing was also taken out in the times to come. And the last swing was also taken out in the times to come. Around this W retest area, this was the area where the market came back to, took support, and then started to head in the higher direction. What I can see over here is as the market came down, it attempted to take support over here, went up, again came down, and again it started to head in the higher direction. In the last chart also, if we go down over there, here also you can see market came down, took support, and then a higher high, higher low structure was created as the market headed up as well. Now, keeping this price action which has played out in these two charts and seeing the similarity which is also there in Nifty 50, there is a possibility that in the times to come, we may see a negative structure around in these regions, and market can fill the gap, take support in this region, and then we can go for a decisive move on the upside. So what I am seeing over here is I am seeing kind of price action similarity. I am assessing that if a negative structure is to play out, this is a way which it can potentially play out. And in this scenario, what things can potentially happen? Let us discuss. So this is the gap which is yet to be filled. I would say this is a good area of support, but there is also one more area that you should consider. This area where the market had stopped, came down, and again recovered. So around this area also there is one region of support. So if the market does seem to come in the lower direction, we can see an attempt to take support in this region. And if the market does not take support region there, in this point also market can attempt to take support. So what we can potentially see is if that scenario, that negative scenario does play out in the lower direction, what would happen is your investments in this phase may go down 4 to 5% or even 8% in the lower direction. Because what has happened is in this entire phase, you would see that many of the metal stocks and many of the banking stocks have taken your portfolio higher. And in case you were not there in those kind of sectors, then you may have an underperforming portfolio as well. But if the market was playing out in the way that it was, and if you were positioned in the right stocks and the right sectors, right now in this phase, I see a 12 to 15% movement that the market has given in some of the metal stocks. And on average, I think around 8 to 10% you should have taken profits in this entire move which has played out. So in this 8 to 10% profits, if the market does come back, what would happen is you would see a drawdown in your portfolio as well. However, if you want to ask my view, I personally would again look for buying opportunities around these regions and these regions. Because right now what we are seeing is in many stocks, the buying opportunities and the risk to reward structures are not currently available. If you look at some of the metal stocks, you will not see any other point where you would be able to scale in those stocks. And in case you have missed an opportunity to enter there, I think in the times to come, if a correction does happen, you are going to get an opportunity there as well. So let me draw out a few charts again in order to show you how potential opportunity can come in your direction. This is a metal stock which has done very well in the past 2 months. What we are seeing over here is this is a kind of a cup-like structure. One more cup-like structure broke out, came back in the range, and again stage one more breakout around this point. At the same time, we see a trend line breakout which has played out around these regions. These were the best risk to reward structures available to you. You could have used the swing as your stop loss, and the market has headed in the higher direction. Now, in case you have missed your entries over there, what you're supposed to do is you are supposed to wait for the market to come back, stage a pullback in a higher high and higher low market. The higher low which will be created around these regions, this will give you the good risk to reward trade. This will give you the trade in which you would be having a greater chance of winning. And from here, you can again look to go long in the market. Let me pull out one more chart for you. In this chart, again, you can see this is a banking stock which has played out very well. Market made a cup-like structure, kind of consolidated over here, broke out. Now, as you can see, this is not the point for you to enter. Rather, this is the point for you to wait for a correction to play out. Let the market come back here. Let it take support around the trend line region or around this region, which was a previous resistance area. If you get a kind of a green color candle in this situation, from here, you can again look to go long in the market. Here again, you are going to get a better risk to reward structure. The best risk to reward structures are to be chased. FOMO is to be avoided right now, because in the past 1 to 2 days, you may have got a FOMO that, okay, the market is heading up and up and up. Don't worry, the market is never going to go like this. Market is going to go up, market is going to come down, again give you opportunities to scale in, and again the market is going to head in the higher direction in case the market has to go for a bullish move for the next 1 to 2 years. So in case you have missed out the opportunities in the past 1 to 2 months, do not be in a FOMO mindset. You are going to get more opportunities. Let me pull out one more chart over here. Let me pull out one more chart over here. Here also what you're seeing, this is a very strong metal stock which has played out, kind of a cup-like structure, consolidated, strong breakout candle, and now the market has headed up. Now, of course, this is not a point for you to make an entry. No entry over here, because the market has already gone up. The move has already happened. So what you're supposed to wait for is a kind of a corrective structure to play out around these regions, just around the 30 weekly moving average. If you can get some bullish structure, one more time you can go for a long. Here again, the risk to reward will be in your favor. So that is what I would like to discuss over here. I just wanted to give an update with respect to what is going on in the global markets and the implication of the negativity which is there. Definitely a little bit of impact our Indian stock market may also be facing, but I would strongly urge you, any fall which would be there in the Indian stock market, in the Nifty 50 index, that time look for buying opportunities in the high relative strength stocks. In the high relative strength stocks, this is where the opportunities are going to come, and this is where the results are also going to come. And as you see, the markets do not just keep heading higher and higher and higher. There are going to be pullbacks. There are going to be structures where the market would be heading in the lower direction. But we already discussed in the previous video that the market breadth has been improving and the sectors have been doing well. In this kind of scenario, if there is a 4 to 5% drawdown in your portfolio, you should not be too worried. You should not be too upset, because that is what the market normally gives. Market will give you a 10% move. Then again, a pullback of 4 to 5% is going to happen. What we should be looking out for, this pullback should be happening with weak selling. If weak selling is happening, then the ideal circumstances to go long around these regions can again play out. So this is a situation where we have discussed the negativity. Now let us discuss if in case a positive situation also plays out. So the second structure which can play out is that the market can continue to rally on the highest direction, and then when it pulls back, that is going to be another entry point for you. See, as I say, we cannot predict the market 100%. We have to take into consideration both the possibilities. This is a possibility which may not play out. There's a lesser probability of this possibility playing. The first situation that we discussed, there's a greater chance that may play out. But we are supposed to be open. We are supposed to be open-minded in the market. We are supposed to embrace the 50% aspect in the market. That 50% only we will be able to call the future in the right way. And let us embrace that aspect and play accordingly. So if this scenario does happen, what we are going to see is we are going to see more profits in the investment positions that we have already created. And then again, when the risk to reward structure would be in our favor around these regions, we can go for the next round of buying. This is a less likely probability, of course. But let us see what the market has to offer, and let us see how the market is going to behave in the times to come. So that is all the update that I have with respect to Nifty 50 and the global markets. I usually do not make two videos, but since in the previous week, little correction in the US market has happened, so that implication I was required to discuss. So let us see with this thought process, with this psychology, how the rest of the month is going to play out. And maybe in the month of November, again, I will be assessing the price action reading, assessing the stocks, and that time again, we are going to discuss which sector is having the maximum probability of heading in the higher direction and giving us good results. So till then, analyze the market, read the market, be prepared for the negative scenarios, but don't be too upset if there is a little drawdown in your portfolio. There are going to be opportunities in the times to come. I want you to open your eyes and look at the market and see where the opportunities would be building, where the opportunities would be created. And if a rule-based entry is there, I would like to go long in the market. If you do have any doubts, do reach out to me in the comments or in the direct messages. But until the next time, take care and see you soon.